Okay, hello. This is Melissa Johnson with Homestock Realty here in Montgomery, Alabama, for your real estate minute. Today, my guest is Paula Robinson, with Paula Boyd Robinson for CMGFI Mortgage, and um, she's going to share some light. Our goal is to educate the consumer today on the home buying process. So I'm gonna ask Paula a couple questions, and then we're going to have this segment often, so you have to check in to see. Um, Paula, so um, the difference in a mortgage company and a bank, I think they need to know why people go to mortgage companies and why people choose to go to bank. My answer to all my clients is banks are in the business of loaning money, but they do banking well. They do a lot of other things besides banking, and mortgage companies, to me, do only mortgages, so which makes them the experts in that field. Am I right or wrong?
You are absolutely correct. Okay, so a bank does mortgages, but they also do a lot of other products. They can do equity lines for you, bank checking, savings, credit cards, things like that. They can also do business accounts, business banking, business real estate. Now, mortgage companies do just consumer mortgages. We don't do anything else other than mortgages. Also, the mortgage companies can do a lot more products than offered by most banks because banks are held to specific guidelines from Freddie Mac and Fannie Mae and VA. So if it's anything that falls outside of that realm, they're probably not going to be able to do it. So that's why mortgage companies have sometimes mortgage companies can broker out loans to other companies where a bank cannot. And most banks will service their mortgages in house, where mortgage companies mostly focus on selling the loan to selling the servicing rather of the loan after the loan has closed. So that's the primary differences between mortgage banking versus a bank doing mortgage.
Okay, excellent. Well,
Mhm.
tell me, when we see our clients, we say you need to go to a mortgage company and get pre-qualified first.
Mhm.
Please explain the difference of being pre-qualified and qualified.
Okay. So when you call up a mortgage lender and say, hey, I'm looking to get approved for a home purchase, the first thing that we do is pull a credit application based on the things that you tell us or the customer tells us as far as income. We pull credit and we match the assets that they tell us to that application. We can automatically get what we call a pre-qualification. Okay, so what that means is as long as everything, all the documentation provided by the borrower supports what they put on that application, we're ready to buy a house. So I normally do not offer pre-qualification until I see the documentation to back up what the buyer has told me over the phone. So that's the difference. That's a pre-qualification. Now, once a buyer goes under contract, we will submit that file to an underwriter, and the underwriter will give us a real approval with conditions. So that's the difference between getting pre-qualified and a real approval. So you can make an offer on a home with a certified pre-qualification. We need to see your documentation, of course, to back up the information that's given to us on the application.
And that's why I tell my clients also, don't be lying and don't make up information, because,
No.
you know, be as transparent as possible. Get the lender what they need, whatever they ask you for, go and try to get it, whether it's W-2s,
Right.
income tax forms or whatever, but don't uh, fabricate something that's not really there, because it will come out. Like your mother, you said, we're going in the dark, come on out in the light. It will come out, and that's what stops a lot of mortgages from going through, because somebody, you tried to make out that you make all this kind of money. Perfect instance. I had a client one time that on paper, she had the credit score, she had all that stuff, but when her tax records came back, it looked like she owned a
Mhm.
business and she had um I don't know what you call it, the correct word, but anyway, she had all these deductions that made her income go way
Right.
down. So at that point, she
Right.
didn't qualify because her income didn't match on what it was on the
Right.
tax paper. Her adjusted gross was
Right.
way less, and so that means she couldn't qualify. So
Right, and a lot of times you'd be surprised. A lot of people really don't know what's going on with the tax returns. They just take it to somebody, let them fill it out. They don't realize that they're creating like a dummy business or whatever on their tax returns. And if they do that, hey, that's your business. But you have to know that those kind of things are taken away from your real income.
yes, because I tell you
So
what,
yeah, I see that a lot.
yeah, because what happened was she pretended she didn't know that had happened, that she didn't, the person that she went to do her taxes, she couldn't find the person. She didn't know where she was. And I said, well, you have a business. And then she said, no, I don't have a business. I just have one income. But, then she says, I wonder why I got a $7,000 tax refund because I never got that much before. And I was like, didn't it,
Yeah.
ring a bell? Alert you that something was wrong with your taxes, but she was so glad to get that $7,000. She didn't think when I get a house that's going to put me in another income bracket and a lower one, and then she couldn't qualify for the house. And to this day, I don't think she ever got one because now she's, going to this brain trying to get her stuff straight. Okay, another question. What does underwriting, in-house benefits, or having an in-house underwriter
Mhm.
versus
Well,
an underwriter somewhere else?
yeah, okay. Well, if you have an in-house underwriter, it's just easier to approach that person with questions or ask like different scenarios if they're right there. So having an in-house underwriter, I feel it is a big bonus. So sometimes people work for companies where the underwriting is somewhere else outside of where you are right now. And with this COVID environment, that's probably going to be a lot because a lot of people are not working in the office; they're working at home, so they are going to be remotely somewhere. But as long as they're approachable, I think it's fine. But that's the difference between in-house underwriting. So it's always great when you can actually touch your underwriter and ask a direct question. But sometimes they can be unapproachable
Right.
within certain companies, right? So that's a big plus to have somebody right there that you can ask a question to.
Absolutely, absolutely.
Mhm.
Okay, explain closing. What does closing mean in the mortgage business, and how long does it normally take to close on a house? And just give me three scenarios: FHA, VA, and
Mhm. Actually, it doesn't take long at all to close on a home. Once we have a contract, we can close on most loans 3 to 4 weeks, as long as we have the correct documentation, or if with the underwriter approves your file with conditions, the person isn't lagging or dragging their feet and getting the documentation back. We can definitely close 3 to 4 weeks. Now, if we're talking about a renovation loan, that could be something a little bit longer, or USDA loan, that could be a little bit longer because you have two different places that it has to be underwritten. It has to be underwritten with your lender, and then it has to be underwritten with the USDA underwriter. Or if we're doing something like the Alabama housing program, it has to be underwritten with the lender, and then it has to go to Alabama housing. So those could take a little bit longer, but USDA, I say about maybe 30 to 45 days. With the Alabama housing program, it's usually like 30 days, like I said, unless somebody's dragging their feet. Renovations is just about 45 days, depending on how soon you can get your contractor documentation in.
Okay, well, those are all the questions I had this time for you, Miss Paula. I appreciate you coming and joining us today. We're going to do this segment probably once a month or so try to educate people and have some uh, information out there straight from the horse's mouth, so you won't have to go around. Because what I find is until somebody else is say, they're taking from me, but that's not my genre. I'm not a mortgage loan officer. I'm not an underwriter. I'm not a processor. So we try to, as real estate agents and realtors, we try to, tell us, you go to the lender and get that off of you, because I tell them all the time, I'm not the more, I can't control interest rates. I can't tell you what the interest rate is right now. Go
Mhm.
see a lender. That's what my always is my answer to them. So we have to go to someone that's informative, like Miss Paula Boyd Robinson here, who knows a lot, been in the business a long time. So with that being said, just watch for us again. We'll have some more information from you. If you have questions, you can always call one of us or ask us. We'll have our information at the bottom of this video somewhere on the internet. But we appreciate you coming and joining us today, and we look forward to talking with you soon. Have a great
Thanks,
day.
Melissa.
You're
All right,
welcome.
you too.
Bye-bye.
Bye.